Tesla launched the refreshed Model 3 on Friday in many different countries besides the US, and Tesla's stock sold off 5%. This was not due to the launch of the Model 3. That was a net positive. Prices actually rose 12% for the Model 3, which is 29% of Tesla's yearly delivery numbers. But it was price cuts on the Model S and the Model X, which combined only account for 4% of delivery volumes for Tesla. We have to break this down, what this means and what you need to know as an investor in Tesla stock, give you the latest news as well as analyst commentary. We are also going to directly talk about Tesla stock and where I think the stock is going over the next couple of weeks and the next couple of months. Considering Friday's 5% drop, I think this information could not come at a better time. Let's start this video off with a little bit of confirmed news with the Tesla Model 3 refreshed Highland Edition. The interior ambient lighting is RGB, so you can change it to whatever color you want through the main screen. And listen to this point of view commentary of the drive with the Model 3 Highland. It's quite remarkable.
So let's do a little pull on the highway. Here we go. That's strong. Great performance. For everyday use and just to have fun, you just simply need a decent set of tires on your long range, and that's basically it. But let's just be quiet and listen to the amount of noise coming into the cabin. For me, this is way too loud. Okay, the new one is definitely more silent, but this is just like sticking my head out of the window. It's insanely loud at 100. I feel like I have to raise my voice. Beautiful interior lighting. Ooh. So the Tesla Model 3 has always been, especially the performance version, a really fun vehicle to drive. Steering is pretty direct, there is loads of feel, and it just has like this vividness, this playfulness. It's just an enjoyable vehicle to drive. You do feel that this is more of an eco tire, so yeah, grip levels are just not on par with the rest of the vehicle, I think. And I was a bit disappointed by the sound on the interior, because that was one of the main issues with the new Model 3, but I still think it's pretty damn loud in here, especially on the motorway. It was still really loud when a lorry would pass me by, and yeah, that's a bit of a letdown to me. That's always the biggest issue I have with Teslas: the interior sound, all the wind noise, tire noise, traffic noise. That's something they don't really do well. Other than that, this is a remarkable update. It is actually, I think, too big of an update to call it an update. For me, this really is a new Model 3. More than half the parts used are new, and it just feels like an entirely new Tesla to me. So great job, I think. Really like it. We can expect this transformation for the Model Y as well, I think. So yeah, fantastic car. Great job by Tesla.
This drive was brought to us by AutoTop NL. Go ahead and watch the full video on their YouTube page. I just clipped out the part that I thought you would want to see the most. Let's now get into the biggest news over the day today. EVs are now at a 90% market share in Norway, and Tesla Model Y is the best seller. August saw plug-in EVs at 90% share in Norway, up from 86.1% a year ago. Full electrics continued to gain ground, gaining 83.6% market share. Overall auto volume was 11,083 units, down over 10% year on year. August best-selling vehicle was the Tesla Model Y. And you guys can see here, I mean, BEV vehicles are the vast majority of the pie here. Diesel vehicles are 2.8%, HEVs are 6.1%, and PHEVs are 6.5%. So it looks like adoption is at max capacity in Norway. Petrol-only vehicles lost 58% of their volume year over year, selling just 122 units in August. This is a trend that will continue into the new year for most of the developed world. Tesla is now looking to hire for AI directly on X. These are some of the job openings we are seeing. Software engineer for Dojo, AI compiler engineer for autonomy, deep learning manipulation engineer, analysis engineer. Quite a few different jobs here. One for the Tesla robot, for motion planning and navigation. All of these jobs look like they are listed in Palo Alto, California. So if you want to be a part of the Tesla team and you have something to offer, go ahead and give one of these applications a fill. According to CarWow, the reason the new Model 3 has a lower top speed is because in most parts of the world, you can't go over 80 miles per hour. So Tesla went with a different tire that improves comfort and efficiency. It's not designed to go as fast, it's a sacrifice they decided to make. Tesla is sending out emails to California customers reminding them to take advantage of the California Clean Vehicle Rebate while funds are still available. Quote, receive up to $7,500 on your qualifying Model 3 or Model Y purchase. Take delivery of your Tesla and submit your application by September 5th, 2023 to be considered for the program. In other news, Lucid is now offering a 36-month lease for $749 a month. We previously heard of this news back in August, and it was going through the end of August. Well, now Lucid has extended this offer until September 30th. Can't really compete with Tesla, and the struggles are starting to appear. Let's now give a listen to what Dan Ives had to say on Friday about Tesla's stock dropping 5% and what these price cuts ultimately mean for Tesla. Again, the refreshed Model 3 prices increased 12%. That is 29% of Tesla's total delivery volumes every year. The Model S and the Model X prices were reduced about 20%. Both of these models only account for about 4% of total delivery volume. And FSD prices were cut from $15,000 previously, now to $12,000. This is going to lead to a higher take rate. When you factor in all of these things, margins will actually improve for Tesla.
Top analyst Dan Ives publishing a note saying that he thinks a new tech bull market is coming. That's even on top of some of the massive AI-driven gains for big stocks already this year. Names like, NVIDIA, but also Microsoft, Google, Meta, and some others. Joining us now is the man behind the note. That, of course, is Wedbush Managing Director Dan Ives. Dan, good to have you back on again. What is the basis and thesis of your note?
I mean, Brian, it's really about the fundamental story into the second half of the year. We see a lot of strength when it comes to cloud, cybersecurity, overall IT spend. I think we're going to see an uptick. I think we saw this week strong Okta, Salesforce, and others. And then when you look at AI, in my opinion, it's the biggest transformation we've seen in tech in 30 years. And that sets up for what I believe is already a new tech bull market underway.
All right. A lot of people want to come up. I feel like it's 1999 again, although I'm, with less hair on my side, because a lot of people want to come up to me and all they want to talk about is NVIDIA. All they want to talk about is AI. All they want to talk about is big tech. And I do worry, Dan, that the market has become way too heavily weighted on 6 or 7 stocks. Is that a reason at all to worry?
Look, Brian, it's a great point. You always have a great pulse on what's happening out there. But I believe it's in 1995, not 1999, 2000. In other words, I think this really started the internet type vibe that we see in terms of spending, maybe similar to 2007 launch of the iPhone. I think the difference now is that the second, third, fourth derivative, this tidal wave of spend, it's just starting. NVIDIA is the first one, but this is something we're going to see over the next 12, 18, 24 months. And that's why to us, when it comes to tech, I mean, we've been really pounding the table here because I think a lot of these names going into next year, I think it's going to be really a golden opportunity and what I view as a 3-year bull market for tech.
Well, you made a lot of market bulls out there happy with this note and coming on tonight, Dan. I want to pivot, though, to Tesla if we can. Last time you were on Last Call, you had this to say about Tesla.
We remain firmly bullish. I think as we go into the rest of the year, demand will be firm going into next year, especially with Cybertruck. I think it's a table pounder at these levels.
Well, today, Tesla shares, Dan, they fell 5%. One day doth not a trend make, but it follows reports of more price cuts in China on the S and the X. The price of the Model 3 actually went up a bit. Based on that, does your Tesla positioning change at all?
It does. It's actually more bullish because ultimately, when it comes to Model 3 refresh, that's the key. In terms of S and X cuts there, I view that as table stakes. We're focused on Model 3. I look at Model Y. To me, in China, there's actually been, I think, improvement in demand relative to where I think many thought. And when I look at the overall Tesla story, 1.8, 1.9 million units, I continue to view as the bogey they're going to hit. Margins, yeah, we've seen the compression, but I think that troughs the next quarter or two. So I'm actually more bullish. We'd be buyers on this knee-jerk reaction.
Now, considering Tesla's stock fell 5% on Friday, I think it's easy to sit here and say Tesla's stock is going to fall, that this was bad. And it was not. Margins will actually improve based on this move that Tesla just made. There's no other way to put it. This was good news. That begs the question of what happened. Why did Tesla stock fall 5% if this was such great news? Well, let me tell you right now, it's pretty simple. If you've been in the markets for a long time, then you know how these things work. Trading algorithms. Trading algorithms control up to 95% of the trading volumes that you see on any given day. So these algorithms, they're programmed in a way that just reacts to the news. They don't actually factor in how the news will affect the company. What I mean by this is the algorithms were factored in or priced in to sell Tesla stock on any news of price cuts. And it was programmed to sell the stock more based on a higher percentage of price cuts. So the Model S and the Model X, their prices were cut about 20%. So that caused algorithms to sell a lot of Tesla stock. And I'm sure to some degree, the pricing of FSD was also priced into trading algorithms to sell down Tesla stock if the price of FSD got cut. And that's exactly what you've seen happen. Now, good news is the markets, once humans come back and really take control of this stock, well, we're going to sit here and say this was actually great news. And you have a heads up on this right now. Eventually, the markets will realize that. But bad news is seasonality, September and October are very rough months for the markets. So as far as where I see Tesla stock going from here, I do think we have very important levels coming. The 240 is a big one as far as potential support. If you hold support there, that's a great sign. If you don't, then you're falling down to 225. That's your 100-day moving average. That would be the next level to be watching for. And again, seasonality of September and October, not great. The economy is not doing that great. So odds are we actually do fall back under 220. closer to about 200 within the span of September and October. I think things need to get worse here before they need to get better. It's hard to say exactly how far we do fall. But I think the risk here is the market's falling, dragging down Tesla. Not Tesla independently falling because Tesla got bad news. No, Tesla got good news. But Tesla is volatile, and Tesla tends to react more volatilely to the broader markets. So if the markets fall, Tesla tends to fall a lot more. And that's kind of what I'm expecting. So that's within the next month or two. Once we get into 2024, that's where I think things change quite a bit for Tesla. The $7,500 tax credit, well, then on January 1st, 2024, becomes an off-invoice rebate for everyone. So right now, it only benefits you to buy an EV like a Tesla for the tax credit purposes if you are a taxpayer. If you get a tax return, there is no current incentive to buy a Tesla, at least on the federal level. Well, starting on January 1st, that is now an incentive for everyone to buy EV, to buy themselves a Tesla. So I do think demand will be very strong, and I think once the Cybertruck launch starts, you're going to see demand, like Elon said on the last earnings call, so far off the hook you can't even see the hook. There's going to be a lot of optimism around the Cybertruck, and I think this new model, right, the new space that Tesla is breaking into, the Cybertruck, not only is going to be a walking or rolling, I should say, not walking, but rolling advertisement for the whole entire Tesla franchise, that so-called halo effect, but also odds are a lot of the initial reservation holders for the Cybertruck also bought FSD as well. We don't have clarity on Cybertruck FSD take rates. Well, that could improve Tesla's EPS and Tesla's margins quite a bit in the beginning and really first half, or really all of 2024, but specifically first half of 2024. Those margins could look very, very nice. So I don't think you want to be betting against Tesla right now. In the short term, it could make a little bit of sense to hedge out your portfolios based solely on September and October seasonally being a very weak period for the markets. So that's my take on Tesla. Near term, the market's instability or weakness could affect Tesla in a negative way, as it always does. But heading into 2024, I think you want to be as bullishly positioned as possible as you can be. So, with that being said, if you guys want to come hedge out your portfolios, come make some money on any downside price action of Tesla or in the broader markets, take those profits, invest back into Tesla at much lower prices, potentially, check out that link down below in the description of this video to join the trading community. We will welcome you with open arms. In the meantime, hit the like button and subscribe to the channel if you are listening to my voice. My name is Michael Tyler, and I will see you in the next one.